What's up, future millionaires? Quick question. Your business is starting to bring in real money. Maybe your side hustle just crossed $5,000, $10,000, even $50,000 a month. But now you're wondering, how the heck do I pay myself? Should I write myself a check? Venmo? Pull out some cash and call it a day? Spoiler alert. Doing it wrong could get you in serious trouble with the IRS, and nobody wants Uncle Sam knocking on their door. In this video, I'm breaking down how to pay yourself the right way as an LLC owner in 2025, step by step, no fluff. Whether you're running a consulting business, selling digital products, or crushing it on Shopify, this video will help you avoid the rookie mistakes that drain profits, cause audits, or worse, wipe out your business bank account. So grab your coffee, take notes, and make sure you stick around till the end because I'm also sharing the biggest tax trap new business owners fall into and how you can legally avoid it. Let's dive in. Section 1. LLC Basics and why this matters. First, let's break down what an LLC even is and why paying yourself correctly matters. LLC stands for Limited Liability Company. It's one of the most popular business structures in the US, and for good reason. It gives you personal liability protection and tax flexibility, meaning if something goes wrong with your business, your personal house, car, or savings account aren't automatically on the line. Now, here's where most new entrepreneurs get tripped up. They think, I own the business. I can just take money whenever I want, right? Wrong. When you're an LLC owner, you have to treat your business like it's a separate person, especially when it comes to money. That's where owner's drawers come in. Section 2. What is an owner's drawer? So what exactly is an owner's drawer? An owner's drawer, sometimes called a distribution, is when you transfer money from your LLC's bank account to your personal bank account. Simple, right? But here's the key. It's not a salary, it's not wages, and it's not taxed the same way. Let me ask you, have you already taken money out of your business? If you didn't track it or you use your business card for personal groceries, hate to break it to you, but you're commingling funds, and that's a no-go. You've got to keep things clean. Because commingling funds can pierce the corporate veil, that legal protection that keeps your personal stuff safe from business problems. So, rule number 1, keep your business and personal money completely separate. Here's how to do it right. Section 3, step-by-step guide to pay yourself. Step 1. Get an EIN, Employer Identification Number. An EIN is like a social security number for your business. It's how the IRS knows your business exists. Where to get it? Easy. Go to irs.gov and apply for one online. It's free. You'll need it to open a business bank account and pay yourself properly. Step 2. Open a business bank account. Your LLC needs its own bank account. No more using your personal debit card for Canvas subscriptions. Walk into your favorite bank, Chase, Bank of America, your local credit union, and say, I want to open a business checking account. Bring your EIN and your articles of organization. You get that when you form your LLC. Once you've got that account, run all business income and expenses through it. This is where your owner's drawers will come from. Step 3. Make the owner's drawer. Now that your business is making money, you're ready to pay yourself. Let's say your LLC earned $12,000 this month. You want to take $4,000 for personal use. How do you do it? You can write yourself a check, do a bank transfer, ACH, or even use Zelle or PayPal. But keep in mind, paper trails matter. I recommend transfers with documentation. Record the amount, the date, and label it as an owner's drawer in your bookkeeping. Use tools like QuickBooks, Wave, or even a spreadsheet if you're starting out. Section 4. When and how much to pay yourself. Here's the next question. How much should I pay myself, and how often? The short answer, it depends. You don't have to pay yourself on a set schedule, like a 9-to-5 paycheck. That's one of the perks of being an LLC owner. Some people take drawers weekly, others monthly, some only quarterly. But here's the key. Be consistent and make sure you leave enough in the business to cover operating costs, taxes, emergency reserves. Example, let's say you're a freelance web designer. You made $85,000 last year and had $30,000 in expenses. That leaves $55,000 in profit. Instead of taking all of that out, you might pay yourself $3,500 per month and leave the rest for taxes, software, equipment, or client refunds. Quick question for you. What's one big expense your business is coming up this year? If you don't know, now's the time to start planning. Section 5. Taxes and owner's draws. Let's talk taxes. Here's the thing. Even if you don't pay yourself in the business, you still owe taxes on the profit. LLCs are what the IRS calls pass-through entities. That means the profits pass through the business and land on your personal tax return. So, if your LLC made $60,000 in profit and you left all of it in the business bank account, guess what? You'll still get tax on the $60,000. Self-employment tax breakdown. You will pay 12.4% for Social Security, 2.9% for Medicare. That's 15.3% total in self-employment tax, plus your federal and state income taxes. So, set aside around 25 to 35% of your profit for taxes. Pro tip: open a separate savings account and auto-transfer a portion of your income there every month. I call it the tax survival account. Section 6. Common mistakes to avoid. Mistake number 1. Withdrawing too much, too fast. Don't empty your business account just because things are going well. Always leave a cash buffer. 2 to 3 months of expenses is a good start. Mistake number 2. Forgetting about taxes. It's easy to forget until April hits and your tax bill is $15,000. Avoid the panic. Plan now. Mistake number 3. No bookkeeping system. You need to know exactly how much your business makes and spends. If numbers scare you, hire a bookkeeper or use an app. Don't guess. Section 7. When to switch to an S Corp. Now let's talk upgrades. Once your LLC starts making real money, think $50,000 to $100,000 plus in profit per year, it might be time to consider switching to an S Corporation. Why? Because instead of paying self-employment tax on all your profit, you'll only pay it on your salary. Example: let's say your business profited $120,000. As a regular LLC, you pay 15.3% self-employment tax on the full $120,000. As an S Corp, you could pay yourself a reasonable salary of $60,000 and only pay self-employment tax on that amount. That alone could save you $9,000 plus in taxes. But it's not free. You'll need to run payroll, file extra paperwork, and stay compliant. Talk to a CPA before switching. Section 8. Frequently asked question. How often should I pay myself? You choose weekly, monthly, or quarterly, but keep it consistent and track it. What's a reasonable salary if I switch to an S Corp? It depends on your role and industry. There's no magic number. Use resources like the Bureau of Labor Statistics or consult a CPA. Can I pay myself if my business isn't profitable yet? Technically, yes, but it's not smart. You're better off reinvesting in the business or paying yourself minimally until your cash flow stabilizes. Final takeaways. Here's your quick recap. Get your EIN. Open a business bank account. Pay yourself via owner's draws. Document everything. Set aside 25 to 35% for taxes. Don't commingle personal and business funds. Upgrade to an S Corp when the time is right. Running a business is exciting, and paying yourself the right way is one of the best ways to stay protected, organized, and profitable. So I've got a challenge for you. By the end of this week, set up your business account and schedule your first owner's draw, even if it's just $100. Build the habit now. If you got value from this video, do me a favor. Like, subscribe, and drop a comment below with your biggest question about paying yourself from an LLC. Thanks for watching, and I'll see you in the next one.